we've got into what I would call a cacophony of people calling for interest rates to rise very sharply around the world. To a certain extent, people had seen a risk of there being more. I still think actually that what the Bank of England's signalling, and that as much as its communications leave a lot to be desired, it has been clear that it was going to be 25 basis points this time. What they've done in making the announcement today is basically say, well, we're seeing inflation pressures rising, and therefore we will act forcefully if we see inflation expectations. And last week we had a sharp rise in inflation expectations in the Bank of England's own survey. If they become further unanchored, as they would say, i.e. they rise. Their decision, I think, is still the right one. The UK economy, we had the news earlier in the week of a contraction. Yes, a lot of it is to do with the wind down in health services, so that's quite a big drag. But the UK economy is actually in a very weak position. It's got so many headwinds. Some of them are related to Brexit. Some of them are related to supply chain issues. And you can see the lack of momentum in the underlying economy, and therefore piling on aggressive rate hikes to try and contain food and energy inflation, which all it really does is just create a lot of problems for households and even more problems for businesses, and it will just slow the economy down. And quite quickly. And in the UK, the danger of tipping the economy into a recession is much higher than in quite a lot of other places where the risks are also quite high.
But Mark, you say the bank planning more rises if inflation rises. Well, they have already forecast that it will rise to 11%, more than they had originally said in October. Are rate rises going to touch this kind of inflation?
Well, they've said what they're worried about is less the actual inflation rate, because they've had high inflation programmed in for quite some time. It's the inflation expectations that they're worrying, because that's the sort of thing which then spills over into wage claims, and people basically then you fed the inflation in the economy. It's less the absolute level of inflation and more what businesses are thinking and what consumers are thinking will happen in the longer run.
So rates now at their highest level since 2009. You talk about consumers. This could be very damaging for both families with mortgages and potentially businesses who rely on credit.
Yes, absolutely. I mean, it will start to tighten up the availability of credit. It should take some of the puff out of the housing market, which is probably no bad thing, given the affordability issues are all too clear to see in the UK and pretty much anywhere else in the world, because of all the low interest rate environment we've been in since the global financial crisis. But it is going to create some problems, and that's why the bank really needs to pursue a very gentle path on this, because at any stage, because they meet every 6 weeks, in the next 3 months, we could easily see people saying, well, actually, the UK is already in recession. Not a big recession, but at that point, then people will be saying, well, why is the Bank of England raising interest rates then?